Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey.
Mr. Marco.
How's it going? Good. I'm waiting for some likes, first, and then we're good to go.
Want to get some likes up first?
Yeah.
Well, you know what? While people do that, let's, there's, the market's doing this seesaw up and down, but I think, there's something interesting to see, at least at least we can get a grip on for the overall picture. I think it's important to, have some idea of what potentially might be going on. We keep talking. I'm just going to keep bringing this up each day, momentum versus value, right? And we're in an environment where the market has stalled a little bit. Okay. I think it has stalled. Let's take a look at the facts. It's before talking about what could cause it. Let's take a look at the facts. The facts are momentum has been somewhat weak over the course of the last few weeks. We've called that. We've sort of said, be careful with these 100-vol names. Like, they're just not moving the way you want them to move, which is basically, if you're buying calls, just keep going up. The time, the amount and volatility that you pay can really hurt you if you're buying these things and it doesn't move quick enough. So this stall over the last 3 weeks can hurt any call options or buying momentum names. That's one. So we see this momentum versus value. Two, we know that there is this potential big rebalance, which means that people are going to have to buy bonds and sell equities by the end of March. When that starts, how that starts, if it's going to happen, no one knows for sure, but it's likely that this buying of equities and then buying of bonds, selling of equities will have to rebalance their portfolios. So that's in the backdrop. Maybe that's causing the momentum to stop a little bit. But again, we just want to point out sort of things that we know. We know that we see today's number, that this economic number that was weak. Private payroll growth was really, really low relative to the estimates, which tells you that there really isn't that many jobs being created right now, that the economy is hurting. Okay. Another thing we're seeing, commodities prices straight up. Okay. Straight up. So that's interesting because usually prices go up when there's demand. Okay. When there's product demand, but right now we're seeing just price demand, which means people are just buying the commodities. Okay. That's important because we talked about who's buying the commodities. China's out there buying anything they can get. They're trying to take their dollars and trying to buy any dollar denominated commodity in the world, frankly. Okay. So you have China buying, and then we have bonds for sale. Okay. We got the bond market imploding. Frankly, this is a huge move. Happens once every 10 years where a move like this is happening, and it's causing a little bit of indecision with portfolio managers. What does this mean for the long term? So you got bonds for sale, and then factually we know that China has been selling bonds. So regardless of what the news or the media is saying about there's inflation coming, there was a question that someone pointed out the other day, or someone basically said they didn't believe in hyperinflation. I'm not sure I believe in hyperinflation. I'm not saying that. I'm actually a realist. I look at the situation and I try to avoid what the news is telling me, and I just say there's sellers of bonds. There are buyers of commodities. We know that China is one of the largest buyers of commodities. They just keep pushing the price up. They're just hoarding commodities. We know that they're also selling bonds. And we know that this coronavirus has wiped out our economy and many jobs. The restaurant industry is imploded. Okay, this is family-owned businesses that has just imploded. So how are we going to get payrolls up? How are we going to get jobs up? So the answer is we got this 1.9 trillion check coming from us from the government.
Mm-hmm.
It's really not all to us, right? They've actually just reduced how much money is going to come to each family. So if you're going to get it at all, you have to have a certain income. So $1,400 is what you're going to get. $1,400 doesn't pay for 1 month of grocery bills for a family of 5, or just barely gets there. So, how much is it going to help? And that's not even talking about rent and what people are really having problems with. So you have this situation where money's going directly to people, but then the government is banking on jobs, that corporations are going to get this money and they're going to what? Create jobs.
Mm-hmm.
Now, what jobs are going to be created? Well, you have a very specific job area that's going to be great. They're spending a lot in clean energy. So we have millions upon millions of 21, 22-year-old kids out of college looking for jobs. And they're looking for jobs in the field of Wall Street, in the field of maybe healthcare, and all these different places. But really where the jobs are going to pop up, okay, is in clean energy. So what does that mean? So now you got to convince, I can't get a 21-year-old kid, I can't convince him to do anything for Options Geek for more than 1 week without his head going, I want to do something else. I'll talk to you later. Now you got to convince these 21 and 22-year-old kids where all the jobs are, they're in, in the backwoods of Texas, and we're going to create windmills. So you're going to create windmills. That's not what many people want to do. So, trying to convince that 21, 20, you know what he's going to say? He's like, I just made 25,000 in GME, or I'm long Rocket right now because there's a short squeeze. Like that's where we are in the world, and there's something really, really wrong. Now that said, does the market go down on that? I don't know. I suspect that in every last moment of a bull market, there is this last hurrah, and when people get a $1,400 check, and there are millions of people that would get a $1,400 check, you either throw 700 at food, and then you take a YOLO bet on another $700 to see what happens, and 700 could turn into $5,000, and then you take another 5,000. This is sort of the psychology that's going on. It's incredibly dangerous, and we're banking on the corporations to do the right thing and create jobs. But all you see is that they're investing in AI, they're investing in technology to reduce jobs.
Right.
So how is this all going to end? I have no idea. I'm not saying it ends now, but we're walking towards a path where I'm not sure this ends very well. Okay, that doesn't mean we don't shoot up in a SPY to 420 or in the SPX to 4,200. I'm just saying that it doesn't feel well. For the meantime, right now we are focusing on buying. If there's this range, from October to December, momentum, January momentum was you're all the way over here. High momentum, go for it. Now investors are looking more towards value. They're moving more towards the value. So what you're starting to see is, look, we're talking about reopening. Texas just came out and said, you know what, screw this. We're opening everything up. So, all of a sudden you're getting things opened up, which means airlines, cruises, casinos. Now, they've had already a big jump, and we've talked about this step up, but you're seeing them bid today, and you're seeing we're gonna look at where the flow is. So, I think the backdrop when you're playing this game, people ask me, how do I come up with an idea, or how do I think about it? Yes, it's UOA. I'm using the UOA as my signal, but what I'm really doing is framing. Not only you see me frame the charts, I'm also framing the world and seeing sort of what's generally happening in the world. Okay. And then I am putting together the micro, which is the individual name, when I see something pop up. So when I like certain names. That doesn't mean we're in certain names. It's just, I like them. I can rattle 5 names, and I'm just waiting for like that UOA to kind of pop up and for the market to tell me now's the right time. So it's a combination of all these things that we're doing. I think it's very, very important that when I'm framing the universe for you, that it doesn't look like I'm overly bearish. I'm not. I'm an odds maker. And we have some short-term puts that will come in handy if the market does make a sharp turn. But in the meantime, I'm trying to find, as the market's pulling back, I'm trying to find situations that are still relatively explosive, still just need a match to get it going, have a good story, and they're in a good trending market, even though the market might have pulled back a little bit. So that's really what we're trying to do. And that's what the idea is here. Okay. So with that said, let's just jump into a few. I mean, I would say yesterday was Zoom. Look at today, FUBO, right? Let's just look at the chart real quick. I'm not trying to jump all over these names. I'm trying to tell you reality. The reality is, if there is a a, a, a measurement from or balancing act from momentum to value, we're starting to move out chips a little bit closer towards the value, not value, Warren Buffett value. I'm just talking about value within this big momentum. Call it bubble, not bubble, if you want, whatever you want to call it. Okay, so FUBO, we're on the other side of the mountain. Once this happens, remember what side of the mountain we're on, right? That's the point of that lesson, and it's been the same. I'm not going to change. On this side of the mountain, which we are on the right side of the mountain, you have to be careful. It doesn't mean that you're not going to get these spikes. It just simply means that the spikes are going to be up and down. You see from here going up, it's mainly bid, comes down slowly and then shoots up. Here, you see these spikes going up and down. Can you see my
Yes.
My inspect? Okay. So you could see these spikes going up and down here. Gets to a top here. There was some news on them putting the the online gambling on top of their player, their what do you call it? Their video service, and now it trades down. This is not a good technical setup. You see this 1, 2, 3. You see from here 3 days ago 1, 2 ahead of earnings, and then it drops down on earnings. This is now looks like it can just reverse 35. Let's call it 35 to 43. That's 8 points. 8 points below 35. You could see 27 on this thing. This is no good. That is no good. Gap up, gap down, traps everybody. You see all the volume here?
Yep.
So if you're long, or you're thinking about getting long and you get this good news or the thing's flying, you're buying here. There's a lot of volume here, which is, let's call it 25 million shares on this day. On this day, there is not as much. 10 million shares, so 10 million, so 35 million shares between these 2 days. They're out buyers here. If you were short the name, which is probably a lot of it, right? People will short the name and then you get crushed. So you see how the market does that? It's evil. There are shorts that believe this stock is a $10 stock, $12 stock. Okay, that's what the shorts believe. So they see 48 and they're shorting, and they're getting more and more aggressive here. And then you get 35 to 43. That hurts. That hurts any short, and they start covering, or weak shorts anyway to cover, and then it gaps here. This is that's not a good setup. That is not a good position. But it's a momentum name. It's a name that people are in it for the rah. But we're on the wrong side of the mountain here, so you got to be careful. When does it get constructive? Let it sit here for 3 months. If it holds $30-$40 for the next 3 months, that's going to take us to about here. And what you're then going to have is you're going to have this. You got to use your imagination here a little bit. So you have this move up here. You're going to have this come down here, and you're going to have this look like this. So let it sit there all the way out to, call it, this is 3 months, 1, 2, 3, 4, 5, 6. Let it sit there to about right here. Break this uptrend if we decide to go up. If the market's going to go up for another leg, break that uptrend, and then you'll see it actually. You'll see the shorts cover, and the shorts will get a little nervous up here because this thing could then literally go up to 100. There would be a chance it could. So that's what I would be looking for. But right now, this is too tight of a range, and this might just literally go 35, 48, back down to 38. And all this time, calls get killed, okay? Calls, puts get killed. So the implied volatility of 150 in this type of tunnel, this type of flag, if you will, whatever you want to call it, starts getting killed, okay? The implied volatility here starts going to 100, because it could make these moves or it could go down huge. Here, it's trading 150, 130 to 150 vol, and it's being bound almost by these invisible lines. Right. You see that? Okay, so you got to be careful about that. If it breaks 30 here and tries to trade 27, then 32 becomes 30, 32, 34 becomes resistance. So that's FUBO. People have emailed me and asked me for my thoughts on FUBO. At the end of the day, they are a video, they do this video. They have this service, almost like a Roku. They have this service, and they attached the gambling to it. The service is really geared towards sports, and that is a total addressable market that is much smaller than obviously a Netflix or something else. It's geared towards sports, males 21 to 35 that want to watch every single baseball, football, soccer game around the world and want to gamble on that. It's a very specific type of person, and very sports centric. So that's FUBO for you.
Okay, nice, cool. I think you also had a comment about FUTU, right?
FUTU, yes, another same type of thing here. It becomes tougher here. Okay, I would say we were talking about it literally right here. Okay, we were talking about the China, the Robinhood of China, and once Robinhood's IPO would come out, that people would look at FUTU and say, if Robinhood's valued at 20 billion, why couldn't this be valued at 20 billion? So where's FUTU? It's probably 15 here. FUTU stock. We're looking at the market cap. There you go, 21 billion. So we're at where, equal to Robinhood. Now, should it be equal to Robinhood? Maybe that's the question, and frankly, I don't know anything about FUTU. I thought it was a great story. I thought that the story had legs because it's easy to understand. I would say that this is surprisingly strong up here. See, this is not a mountain where it's like trades back down to 100 quickly, right? This is pretty damn strong, holding 156, and it's not like it's trading light volume. It's 2.5. These are down days, and it's trading low volume, 2.5, 5, 7. On the up days, it was trading 15 million here, 15 million, 17.5 million. These are big moves. Surprisingly, it's hanging strong there. So I would say that, can it make my eyes are pointing right here. So my eyes are saying, Felix, watch the pullback. You see this right here? This gap. Okay, that gap, my mind is saying, watch that 30 level. Watch that 130 level. This is also forming a little bit of, I see a little bit of a triangle. Maybe it goes down this way. If you don't take that high, you can sort of look at it, that way a little bit. It's pretty tight there. But maybe that's really the thing. And maybe this takes 2-3 months. Robinhood comes out for IPO, and maybe that's the moment where they start selling something like this. Okay, so I would say that FUTU, it's gotten to where we thought it would get, a comparison to Robinhood. It's surprisingly strong in this state to me, from going from literally 35 to 200 and only coming back. And this was a moonshot. This was 110 to 200 in 3 days to only come back $45 and still trade tens of millions of shares per day and only come back $45. That to me is strength right there.
Right.
So I it's not like I want to buy it here after it goes up here. I would like to see what I would call maybe a mistake or something like that, and maybe hit 130 and maybe try to buy it in this sort of range is what I would love to do. But I'll try to be a little patient there.
Okay. All right. That's fair. Yeah.
Okay, good.
Awesome. And then also, guys, don't forget to like the video. We really appreciate it. And we got a good comment on stock that we're going to do after we finish with these ones. And the next one we have is banks. I was surprised to see Bank of America and Citibank having calls in May being bought.
Okay.
Which is really interesting.
I would say this. I think it was last week we were talking about the banks. When interest rates, when the back of the yield curve, so you have the way people look at the yield curve, you have 1 day, rates, 1 week, 1 month, 1 year, 5 years, 10 years, 30 years. The 30-year, the 10-year, 30-year, even the 5 years starting to move up. Okay, that's moving up. But if you go to the bank and ask, hey, can I get 2% on my money? They tell you, take a hike, go somewhere else, right? You're not getting money. So when the yield curve, when they talk about this yield curve, the yield curve moving, okay, it's the back end that's moving. The back end usually has to do with long-term inflation and how, pricing and job growth and whatnot, that's moving up. What's really interesting is that for 10 years, this is what the government wanted. The government wanted inflation and the curve to kind of get back to normal. And now that it is, it's a problem, right? Now that it is, it's like, wait, we can't do that. Now they're thinking about putting money into the bond market to slow things down. So it's all this game. It's all a game that it's hard really to follow if you listen to the yapping. It's really difficult, but you got to watch what's happening. And there's no business better than the banking business when the yield curve is doing this. Okay, because they give you no money on you actually give them, you put 100 grand, you put 250 grand into your bank account at JP Morgan, at Chase or at Citibank or Bank of America. And then you ask them for a loan. So they give you no money on your, or they give you no interest on your money, a very, very tiny drop. And then when you want a loan, they're going to charge you, it's probably now 4.5%.
Wow.
It's like, they're making, they basically taking your money, and they're they have the house as collateral. So they can't lose, and they're just clipping your money. And not only that, but when you run out of money, they have your money in the bank. It's like they can't lose. You cannot lose if you're a bank. They make so much money when this curve goes like this. You're talking about, let's just call it, let's say Wells Fargo was stopped at $2 trillion. You talk about $2 trillion. Some of these have a much bigger. They have offshore balance sheet sizes as well. But you talk about $2 trillion at say they're making on that curve, they make 2.5%, 3.5%. You make, let's call it 2% on $2 trillion is how much? You want to do that math?
20 billion.
Yeah, 40 billion. 2% on 2 trillion is $40 billion. Right. Okay, $40 billion. Like, it's almost risk-free, right? It's like they're literally borrowing, taking your money because you gave them your money, and then they're borrowing and giving you back the money to go buy a house, which they have, you want to buy a $600,000 house. They have, if you have $250,000 in the bank, they have $250,000 of your money that's sitting there knowing that you can't default unless we take your money too. So they're not going to lose. That's one way. The second way is they have, over the last 10 years, because they weren't making money on, here's the thing, they weren't making money on the yield curve. So how did they make their money? They started, I don't know if in the United States, you start do anything within a bank, they charge you $1 here, $3 there. You want to wire something? Every wire costs $15, $25. You want to do this, anything you do, they got to charge you. You want to take your own money out of, because it used to be you could just take money out of any ATM and maybe you pay like 50 cents or $1. Now, if I go to Citibank, if I'm banking at JP Morgan, I go to Citibank because that's the only ATM around me, and I go there and I take out some money, they charge me $3, $4. On $100, if I'm only taking out $200 on 100, that's 3-4%. It's a lot of money. 3-4% every time you're taking your own money out. So that's how they were making their money for 10 years. Now they're still going to make money like that, and the yield curve moves up. They get there. It's better than internet stocks in 1999. These things, when this type of environment, if it holds, it's explosive. Now, we are seeing calls in Bank of America and Citi. We'll look at those in a second. But in the backdrop, remember what we just talked about, how there might be this bid for bonds. Okay, so the reason why banks are doing well is because the bonds are getting crushed. So there might be this sharp bid for bonds if the government comes out and says we're going to help the end of the bond market, and you could see bonds have a sharp move higher, which means interest rates will go lower, which means the banks would say, oh, that wasn't, they're going on the yield curve. Net interest margin. That's how they make money. So you got to follow that yield curve to see the banks, but the banks are making fortunes here. With very little risk. So that's why the banks are doing well. So let's just take a look at what we're seeing. And we are seeing, which one, Citi? Let's look at Citi first.
Yeah, Citi and Bank of America. Yep.
So Citi, Mays, right? I saw the Mays earlier. Even March is a bid here. But let's look at Mays. You got earnings in April. They're buying the Mays. Looks like they bought them right in the morning. Stock went up. No spreads, 271. So they pay 71, 70, 70, 71, 70, 281, 285, 293. Okay. So this looks like a bid. This, they paid the offer. And then it looks like they probably paid the market offer. Okay. So they bought these for sure. And 75 looks like a breakout. So, I mean, they look good. Just want to see the volume on the stock. I don't like that. This is good here. You see this right here? This is good. So the last 3 days, it's traded above this level. Right. Let's frame it. I can see it, but let's just frame it. Okay, so what's the line that you think, or that we were seeing, we're looking at? I mean, there's one, to me, I tend to look at these sort of like big moves and just go across. So, you have here, something here. So you have something like this.
The 8 line, yeah.
Yeah, something like that there. Okay. You You see this gap? The market loves gaps. See, so something like this, 70, what is that, 73? And you have it somewhere around here. Call it 70 where it was having trouble, but it looks like really, I'm going to move this down to right around here for the near term. Okay. So near term, we're somewhere around, let's call it here. Okay. Yeah, that's how I would, this is how I'm looking at it. And then the highs were somewhere back to, this is back here, the crash. Okay. So back to normal is somewhere up here. Okay. However, you know, if you look at the yield curve here, it's much different than where we are today.
Right.
Okay. So things are very, very different for the banks. And what I would say is that if the economy opens up and you have this yield curve that is trading the way it is, this is not going to be the top 78. It's just not. The one thing I'm concerned about here and chasing this right now is that, you know, I just don't see the rah-rah volume right here in this last sort of move. There's decent volume, but it's not the lights out volume on what you would think is a breakout. So, you know, this is how I'm framing it. I'm looking at 78, but after that, we'd have to go back a little bit further just to see how high this could actually go. That's the high for many years, I believe.
Right.
So we're going to go back just to look. Let's go back. Let's go back 12 years just to get it, just to look to see what happened. Not even, we got to even go back further. I'm going to go back 19 years just to see. I just want to get a look.
Okay.
All right. So we have Citibank trading at 450. This was the crash. Okay. Before that, you know, you had a good yield curve. They're making money. This is obviously a disaster. This was the home. This is when they're lending everybody money and they're just making money hand over fist. And this is the disaster. We're still trying to come out of that. Okay. So it's been 10 years. They spent 10 years building out this. They're not making this money that they were making on the lending side. Plus they lost. It's my belief that they lost. These companies were all bankrupt. All the banks were bankrupt. So the government had to allow them to make some money back. So they gave them money and they they allowed them to make some money back. And now it's been years where they're building up their reserves and they're ready. And now the yield curve is going. So can this go up? This thing can move. Banks, when they move, I'm telling you, they're like internet stocks. They're like, they're as good. It's the amount of money they make is ridiculous. And they make it almost risk-free. You know, the real estate market can't implode, but you have inflation there. And so, you know, there is, when people are buying calls in this, and hold on one second, let's just go back to, you know, you can't deny that these banks can fly. They can fly, like really fly. They'll crash eventually when something happens with the dollar or you know, when there's a major crash. But I don't think the next crash is going to be this real estate crash. I think it's going to be something else. And so these guys could be covered to some extent here. They have fintech to worry about, but I mean, I could see where this is, you know, they're getting excited about call options here. And on top of that, the volatility is only 37. So you're talking about, instead of Citibank, what if I told you this was FUBO? And you can buy 75 calls for $3, you know, for 4 months, you'd be like, oh my God, I that's incredible. That's how you have to think about it. With the yield curve up, these are trading like this might be too low for the banks.
Steven says that they announced big restructuring with the new CEO, cost reductions, productivity investments, et cetera, et cetera.
Yeah. So I think, look, I think the banks have been doing the right thing for the last 10 years. They had to, right? They were forced. The government gave them money. They were forced to actually clean up their act. They did. It's all fee based. It's you know, they're probably reducing capital commitment to, you know, the major hedge funds and all that stuff. You know, they don't need that risk. They make so much money on people. You know, when I worked at Bank of America, I can't remember the exact amount, but I was astounded at how much money they make just from people pulling out money from their bank. ATM fees.
Wow.
They probably right now it's probably, I would say, $1 billion just on ATM fees. Imagine that. Although not much cash, so maybe it's not as much. This talking 20 years I think it was like $300 million 20 years ago. But maybe it's maybe it's 500 to $1 billion. I don't know. Somebody that's good homework for somebody to look up. But they make it. It's you take your own money out, and they're charging you money. So think about that. So these things, this might be too low for longer term options because they can go. I would like to get past this month. I would like to get past March. Is really what I'm thinking, because what I'm looking at is this. And this is not healthy for this right here is not healthy for the market. It's not healthy for the market. I like TLT calls here, looking at something like the 41s out to April 1st, April, whatever, the 141s out to, this could easily, you get an announcement from the Fed that they're going to help, this is going to trade 146. And then the market's going to, you get an announcement where they're doing what they called yield control, I think it's like yield control, something like that. Some operative that the Fed's going to do. This could take the stocks from, it's a race here. It could take the stocks on a jump before they come down. It can say 385, 400 quickly. And, by March, call it mid-March. So this is what could happen, 385 to 400 if the Fed decides to support, the bond market. Right. Remember, you support in the video that we have, which is, I always tell you to keep going back to it. What is it? It's the here. It's the let me show you. It's actually in the free membership. People should go watch it. Skipping my brain is fried here. Where is it? Where is it? Here. The warning heard by the top 1%. It's a great video. This is a really good video to watch. I know you like it, Marco. It's a good video to watch to see what and to see how the top guys in the world are thinking. So I would say that volatility for the banks is probably a little low. That's why you're seeing guys come into them and buying a little bit of time because it's low. And think about it, if the bonds, if the Fed says something and bonds go bid, the yield curve comes down a little bit, you will see the banks probably come off, the rest of the market explodes, right? And then it'll go to you could see 405 on the SPYs. Okay, you could see that. You could see stocks go back up significantly and fast because the Fed is supporting the market. You support the bond market, you support the stock market. The stock market is just a small sliver of the bond market, and the FX market is huge. Okay, so you support that market, the equities are going to fly. It's a race here. The market's putting pressure on stocks. You got big for sales, and then you got the Fed maybe having to support the bond market is forcing the Fed's hand here because that bond market is a disaster. Mm-hmm. It's actually a disaster. So I would take a look. If you want to take a look at TLT calls and whatnot. But I'm hoping to hear the Fed not let the market crash. Because the bond market is looking like it wants to crash, although this looks it looks a little constructive here. How it's every time it drops, it goes up, drops, it goes up, drops, it goes up, drops, it goes up. So, I could see this going back to 146 with an announcement, 147 into March, possibly, and then that would probably boost the stock market, in a quick move, and then you have this turn where you have to sell stocks and buy equities, and then you start getting crunched right back down. So something like that, or the market going up. But I could see some craziness happening in the next 3 weeks that might be pretty unexpected. Unexpected. Okay. So cool. This is going to be the same story with any of these bank names, whether it's Citibank or it's Bank of America. They're all the same thing. So what do you see here? May 36s, 37s, 37 and a halves. Sorry, this is April. Let's look at April.
No, take a look at May. It didn't refresh.
May?
Yeah.
Let's look at May.
Yeah, there it is.
38s, 24,000. These are a buy. They're buying them. For sure they're buying. And they bought them right at the get-go at 20,000 times. Yeah. So they're looking for a big move. And frankly, the stock going up here and trading sideways like this means this is a flag, and during the day, it's found its level. Someone is getting long here and pushing the call. So, look, again, 34. You're talking about the other tech names that we talk about, the momentum names. They're at least 60 vol, 70 vol, going all the way up to 250 vol. Right? This is a bank name. Of course, it's the banks. has a lot more holders that are willing to trade it. But ultimately, if you get the banks moving the way they can move, this vol will probably go up and the stocks could potentially go up. So something to look at, something to be aware of as a backdrop. Again, I'd love to see a pullback in the banks. I'm not sure I'm going to get it, but I'd love to see a pullback. And I think we'll get it if the bond market goes from here to here. If the bond market goes here to here and banks stay where they are, forget it. It's like it's off to the races. You're not going to catch them.
Right.
Okay.
Right. Cool.
All
nice.
right. Good. Good.
Why don't we jump into commodities?
Commodities, yeah.
Yeah, we talked about the AA, but we got one more that Brenda found, which looks pretty good.
Okay. AA, yes. AA. Look, I mean, it's Goldman Sachs is called doubling down on the super cycle of commodities, opening up the reopening. They talk about the reopening, and they talk about just the commodities a bid. We know that China's buying everything in sight. So, you know, when you see something in AA usually doesn't trade this much. But let's take a look at AA. Get the 30 calls here. Same thing out of the get-go. 10 o'clock, 11,000. Was this bought? Let's just look at this one. This might have been sold. This looks like it might have been sold. 67. This looks like it might have been sold. Okay. So that's in May. Was it? That's interesting. 30 calls in May. I mean, stock did move up here. It's just going into it. 1020 right here. The vol was coming down. It's a little. I don't know if the stock was going up. So I don't know. It looks to me like it actually was a sale. What happened in April?
$35.
35s. Vol is up in both of these. I'm not convinced the Mays were a buy, but I would have to really start digging into even more details there. But I'm not convinced the Mays were a buy. These are on the bid here too. You know, can somebody be selling calls in Alcoa? It wouldn't be out of the question, right? I mean,
right.
Stock has made a move from 24 to 31. Someone takes the opportunity on the get-go to sell calls. I mean, I don't think it would be out of the question. I'm just not convinced from what I see there that there's call buying in Alcoa. That's what I'll say.
Fair enough. And why did you take a look at tech as well? TECK.
Tech, TECK, tech. Tech resources, 22,000 up. April's. What's this?
Mining company from Canada, I believe.
Yep. Let's see here. Sorry, I just want to see this. Okay, so up for 53 yesterday, open interest 53. And they're paying the vol 54, 56. Yeah, this looks like a buy. This looks more like a buy. As they're coming in, the vol has been trading higher. Okay, I can get on board with that. Now, let's just go to, I know nothing about the stock. Let's just go here to tech. Okay. All right, so let me just go back a little bit just to get acquainted with the stock. Just go back in time. Okay, so, oh, no, sorry. I want to go back 10 years. I don't know if it's a new stock. Okay. 10 years, the stock was up here. 2016, up. And what do they do?
Mining, copper mainly.
Okay. Let's look at, copper. Oh, there you go. Copper is also tied to EV and energy. Okay, so here's the stock. So from 2007. So I just want to get a sense of what can happen, right? Possibilities. All right, it did hit 52. going into 2000, after 2009, 10, 11, it did hit 52 for whatever reason. I have no idea why. But let's look at this level. 28 seems to be a level here. We're going back 10 years just to give us some sense. So I'm looking at 30 here, here, here. Okay, in the last 2 years, we got this V type of formation, V type of formation. Okay, so seems to love this $4 level. Then it trades 6. All right, so let's look at it now in the near term. Okay, I get the idea. So now we're going to go here, and we're going to go down to, let's say, 2 years for a daily. Okay, so we're here. 25 is a level. The stock looks to me like it's trading well without knowing anything. I'm looking at the MACD too, and I see that it's pushed, here. This was this high here, and it pushed here with another high here. So it hasn't really broken anything, and I suspect that it'll have another push higher. So I want to know what happened here. I don't know if that was earnings. See that date right there with the big drop on decent volume. So I want to know what happened there. I'd have to do some research right around this area, let's call it. I don't know if it exactly matches up, but something's going on there. 21 seems to be, see how it dropped off here? 21 seems to be the level that it hit. Oops, sorry. Where it hit right over here and broke through, and then you see some support here. So bullish trend has sort of recouped what had happened here over the course of the last 2 years. This breaks out with decent volume, comes back to 21. Someone is playing a push back up. And if it's in copper and it's a commodity, actually looks pretty good.
Nice.
Pretty good. And it's only cost us how much? Those are only
$1.
Yeah. Oh,
and
they're the 24s. They're the 24s out to April. Yeah, I would say 24s gets us to, what is this saying? If they're buying the 24s, they got to be thinking 28, 29. So let's call it 28 and a half. So what did we say? We said that the high was, let's go back a little bit longer. For some reason, why does 28 ring a bell in this thing? Did we see 28? Hold on. Let's go back.
Term, yeah.
4 years. 28.
There it is.
28, 29. So there you go. They think it's going right back to the high. So again, the framework, without knowing anything, framing this name and where the possibilities are in the near term, we saw 52, but in the last 4 years, it got back to 28 to 30, call it 29. Someone's buying the 24 calls for $1. They got to be thinking 28 and a half to land it right there to buy these and pay $1. So I got to match 28 and a half to sort of, after framing this, to right here. Makes sense to me. Now I'd like, now the homework is to go in and take a look at what the CEO is saying, take a look at the earnings transcript, go back, figure out why it dropped. Maybe it was just because the market was dropping off, but this is how this looks pretty interesting. Tech, it does look interesting. I would agree.
Nice. Awesome.
Who came up with that one?
Brenda.
Nice job, Brenda. I like that. I do like that. She
bought the 23s.
I like that, Brenda. That's good. It's very good. Very good.
Awesome.
Good. Awesome. What else do you want to do?
Before we continue, I just want to ask everybody to drop a like and share the podcast. We'd really appreciate it. And talk about Wall Street bets and momentum. There's SKT that popped up today, if you want to take a look at that one. And then I'll tell my story about, what happened with Rocket yesterday. I mentioned that I bought some.
No, tell your story now.
I think it's a good lesson for everybody.
Tell your story right now. Now you're going to tell your story. Because you know what? Hold on. I'm going to preface this by saying I am sure that people are going to resonate with what you are about to tell us. I'm sure people are going to have felt similar feelings and emotions in similar moments. I'm sure I'm going to have comments after you say what you say, but I want you to tell your story on what you did, how you did it, how you made money, lost, whatever it is that you did. You tell the story. So and tell us how you were feeling, because this is very, very good. Go ahead.
All right. So Rocket was at $29 yesterday, and I thought, okay, this is catching some steam. I've seen on swaggystocks.com that they're talking about it on Wall Street Bets. And I said, why not buy some options? So I bought $30 calls in March 5th and then March 19th as well. So I had a two lot, one March 5th, one on March 19th. I paid $2 for one and $3.50 for another. So I was in $5.50. As we were on the podcast, I was, with my left eye, I was looking, and it was jumping. And almost by close, I was up 20. So 500 turned into 2,700. So I was up $2,200
in a day.
In like 4 hours.
Okay.
And I thought, oh man, it's cool, blah, blah, but I don't want to sell. This might be the next GME. I might make more. I got really greedy, I admit. Okay. And, watching the pre-market the entire morning, I was anxious. It was going down. Once it opened, it kept going down. End of story. I made $100.
Well, so, okay. So, by the way, you're not the only one. There's millions of people that do this. Millions. I do it. It's the human emotion part of the game. Okay. The funny part I want to say is that yesterday, right before the podcast, you told me, okay, I'm in this trade. I could feel the confidence and the excitement. I could feel it. I could read people and something's going on. Oh, I go, what are you doing? I'm and you're watching this thing on the side and you say, I just made $2,000. I said, on what? And it's on Rocket. I just bought some. And I said, oh, okay. I said, you blew by all your stop signs. I said, did you sell any? Did you sell? No. And you said, I'm YOLO, man. This is YOLO. And I'm thinking, YOLO's, you only live once. I go, oh God, he got the fever. And I'm trying to, I never tell anybody what to do. That's not what I do. I don't tell people how to, but what I do try to do in those situations, try to remind you, you blew about 3 stop signs. You're going about 150 miles per hour. Your head's out the window screaming like, yeah. And I'm thinking to myself, this is a train wreck about to happen, or a car wreck about to happen. It's like, it's important, today. I asked what happens. I said, did you get out of any? No. Okay. Listen, it's not the end of the world. It's not a big deal. You made $100. Fine. $100 and call it a $2,500, lesson. Because what I asked you, I said, remember this moment. Right? It's better that you lose $2,400 than when you take your account to 100, 200 grand and you lose 150 grand. You don't want to do that. Right? When I see people riding through the stop signs, literally I'm holding up a stop sign going, where you going? What happened to the months and months of me telling you, hey, at 100%, take a little bit off. There's always an ability to take some off. What happens is that little voice in your head starts saying to you, this is the one. We're going to make 100 grand right here. And what I always tell people is this: if you count all the times that you just clipped $500, $1,000, $1,500, and instead of just waiting for that one to go to right. the moon, you're probably better off, and you probably stay sane, because remember, this is the most important part of the game, is to make sure that you're focused. So what you did is not unlike anything. I mean, there's got to be a million people doing the same thing. What the lesson is to try to recognize the feelings, because the emotional roller coaster is also, it's a roller coaster. It is a high like you've never believed. And some people are doing this with 100 grand. They take 20 grand, they turn it to 100, and they're riding this thing. And these moves become very big. And the other thing that I'm trying to especially get you not to get used to are these big 2,000, 3,000, 4,000 wins. It's like the worst thing that can happen if you don't have it up here, right? If you're not strong up here, the worst thing that can happen is that you make 20 grand quickly. I mean, in like 2 days. If you don't want to work no more. Nobody wants to do anything. You're just like, this is the easiest. I get to sit down in my, my room and kind of like do what I want to do and have fun and listen to music. It's the worst thing. It's not an easy game, and the market is evil. It knows how to take that money back. You have to think about it as a sport and try to be careful. And that's why we have this plan and why we're trying to follow this plan. But you're not unlike, how many times I've done that in my life? A million times. This is the one. I'm playing with a lot more money. This is the one. This is, it's just, and afterwards, money doesn't matter on the way up. It doesn't matter. It's like, who cares? This is like, now I'm playing with the house's money. But what happens is when you get hit and it goes from like 2,000 to up 600. By the way, the other part of the story is we got on the phone earlier. We were talking only about an hour and a half ago. And I said, you're up $600, $700, just take it off. Take half off. And before you know it, 20 minutes later, it was down 100. What happens is you just start thinking, that it's going to go back, and you start playing that game of, I think it's going to come back. That's a hard game to play. It's just a hard game to do. So look, lesson learned. You paid $2,500. That was, the market gave you a lesson. You got out making $100, so you should be happy with that lesson. And think about it as like you really learned something, and that in fact money does matter, right? You're doing this to make money, and so you want to make sure that you can always. Rule number one is to try to take the money off the table. That's why we have 100% exit, right? 100% exit. If you would take out 100% exit, I tell you, then go watch it. It's fine. You took your money out, no worries. Okay. So anyway, lessons learned. But I think that'll resonate with a lot of people that are on the that are watching this and have done it themselves. Everybody. It's what makes us human, right? It's what makes us human. All right. Cool. That was good. I like that. I like that story. Good. Thank you for sharing that, Marco. Nice. Let's look at the other one, SKT, because that's a Wall Street Bets name, SKT. SKT is a name that is heavily short. It's malls, right? The malls, the mall REITs. I mean, how good can they be doing, right? Well, the stock has gotten drilled. They have a high dividend. People playing for the dividend. If the malls could find a way to transform from stores to actually malls, to actually something that people will go to, like maybe movie theaters or restaurants or something that they can come up with. I don't know, water parks. I don't know. Then perhaps these things survive. And, we got Wall Street Bets are on the name. It's heavily shorted. It has been heavily shorted. Our favorite player, Melvin Capital, has been short this name in a big way. And they're buying here the 20 calls. I mean, this just looks like short squeeze type of, trying to force a short squeeze in the near term, is what it looks like. It looks like they're coming after these out of the money calls and trying to squeeze it, right? And trying to squeeze it. These games are dangerous games to play, but they've been winning, Wall Street Bets, and they have 1 million people buying 100 shares. You can crush the short. So they've been doing a pretty damn good job, I have to say, of getting people, getting these names and scaring the bejesus out of all these hedge funds. So what can you say? They're buying calls. They're buying front month calls. They're trying to. I don't think this is. Sure, people like this. They like the stock, but I think they're trying to squeeze here. And that's all I'll say there, because it's not really, they're not buying earnings. They're specific in really the marches, right? So that's telling you that they're looking for something in the next 3 weeks, trying to get long a lot of these out of the money calls where the gamma, the market makers are short these options, which means they're short gamma, which means if Tanger Factories, SKT can start trading closer to 19 and a half, these start exploding, right? They start talking about 2, 3, 4 million shares that people start having to buy. That's what gets these things going. So one to look at. I don't like playing this game. It's very difficult, and the stock could easily have negative news and trade back to 14 in a heartbeat.
Neither anymore.
What's that?
Yeah. Neither anymore. I don't like playing.
Yeah, exactly. How about questions from the audience? Anybody has a question?
Yeah, guys, if you have any questions, comment them now, and then we'll be answering some. I'll just take a look and see.
While you're looking for questions, the other, I mean, obviously the spaces that we've been talking about is like CCL, these cruise lines. Stocks are trading well here again today. It looks like maybe there's some selling or people taking a little bit off the table. The 30 calls here, 10,000, there's 50,000 there. The volatility is not up on a day when the stock is exploding higher. We looked at CCL and talking about framing this stock, and we had it just in case people missed it. We were talking about sort of this level here, 24, 12, 24. I would say somewhere around here, call it the 40 level. This is normal, somewhere around here, normal. Okay, that's normal, 50, 52. And we're doing this climb. We are doing this climb up this ladder. We said, 32 might be a decent level. So this is how we had it. We had it 32, 24, and then we had this 17 level, which seemed to be 17, 18 level. Okay, so this is how we were framing this walk up, where at 32, this is not that much, but really, if everything opens up, and apparently, I'm reading things in Europe, people are opening up bookings for 2022 cruises. You have a situation that it's getting halfway there, right? We're halfway home for the cruise business. Maybe that's what the market is trying to price in. So here it's dead in the water, right? Here it's dead in the water. It climbs up here, shoots back down. Remember, we talked about this and this being very sharp, whereas this and this looks a little bit different. See, this down, sharp, this to the side look different, and then you take another move up. We talked about from 12 to 24, that's 12. 12 plus 18 is 30, and we just hit 30 right here. So I could see why it doesn't look like it's rah-rah in the CCL. It looks like it's actually might be a little bit of call selling. Okay.
And on the talk of recovery stocks, we actually got one from Rudy, WYNN.
Oh, Rudy.
Wynn Resort, right? Is that the one?
Yeah. Yes, Rudy. Rudy always likes to remind me of these Las Vegas Sands, Wynn and Melco. Yeah, these look, Wynn is a well-run company. It's one of the darlings of the casinos. Wynn, Las Vegas Sands. Las Vegas Sands just sold their properties in Vegas today to, I think it was Apollo, but they sold their properties in Vegas, so that had a spike today. These things, if the market opens on time, they're somewhat explosive. It's the reason why we were trying to be in them. They are explosive because see this right here. This was a disaster.
Yeah.
Oh Lord, oh Lord. Down here, straight. I mean, we're long calls here. Where were we? We're long calls here, expecting this thing to get to blow past 73. Because if they open up, this thing, the world is flood with cash, especially in Macau. They shut that down. You see a lot more stock trading in Macau. The stock trading is going through the roof. This thing, to me, looks like it's heading back to 73. Wynn, that's Las Vegas Sands. Wynn, it's just a darling in the name. Same type of thing. It's 70 to 115, call it 116, so $45, and 100 plus $45, 145 gets us back to here. So you can see, I'm looking just at, let's just look at this right here. See that level right there? 150. It's also here. There's a little bit something going on there. So somewhere between 145 and 150, I would expect you could see it stop a little bit. Okay. But this is basically saying that we're close to opening up. And this is, again, this was when right around here during the, call it normal stage. But yeah, I like these. I really do. I really do. I really liked Las Vegas Sands. Really like Las Vegas Sands. I like the casinos. They're just ready to explode. People are ready to take vacations. They're ready to, find something to do, and no better place to let loose than Las Vegas and Macau.
Nice.
Okay. Yeah. All right. So I do like it. Are they buying calls in Wynn?
They are. Yep. In June.
I can't curse on the podcast, but now's about time where I would say F.
That's March.
All right.
And then
so Marches and yeah, the 140s. Look at that. Paying 16, looking for 190. 185, 186. Yeah. Yeah. Makes sense. Yep. These are, it's looking up here. See, 185 happens to be right at the highs. So cool. Someone's looking for a continued right at the high. So I would keep track of these. Yes. I like them. Yes. The three big ones: Las Vegas Sands, Wynn, and Melco. Take a look at Melco as well. Melco's China name. Look at this thing. Mamma mia! You wanted, as much as you wanted down here, and then this explodes. This is China and Macau.
Nice.
All right. Good. That's a good eye, Rudy.
Cool.
What else?
Let me find that question. All right. Here it is.
Why does the market like gaps on charts? Great question. The market tends to like gaps. Why do they like gaps? It's just it's an area where supply and demand switches. It's an area when you see like gaps, that means someone got trapped. So when you see a gap up, gap down, there's groups of people. I'm just taking, what is this, Melco? Okay, let's go a little bit shorter time frame so we can 1 year. There's an old saying that the market fills every gap, right? So every gap that has ever happened, the market will fill it. At some point, you will see it come down. Now, there's some truth to that, but you could also say if the market ever crashed, when the market crashed, it filled every gap from the last 40 years, right? So for whatever reason, that there's no volume there. There is no volume. And so when these people, like this would be a gap up, right? Gap up, traded back down. And this was somewhat filled, right? You see this, how it goes. It's not a true gap. This is a gap. You see this gap? Let's get the annotation out there. See that gap right here? Right? And then what happened? It traded down, traded back up right here. It did another gap from here to here. See, gap down, gap up. Now that's usually pretty bullish. Eventually it filled that gap over here.
Nice.
But what's going on in gaps is that there is no volume here. There's no buying and selling here, right? No buying and selling here, no buying and selling there. And so people are either trapped up here. I think there's a way to do boxes. Yeah, there is. I'm so simple with this type of stuff, man. There's probably much better ways of doing this, but people are trapped here. There's people are trading here, and then it drops here. There's no volume here, right? And then people are trading here. Again, no volume here. So when it trades back up, it's sort of going back to, if you will, causing pain, right? Trapping people, selling here, buying back up. Again, I'm not a technician. I just know for a fact that the market likes these gap areas. It's a great question. I'll have to look up. Maybe someone can help me out. I'm not a wizard. I don't have all the answers, but I do know that gaps are important.
Cool. Nice.
Yeah, good.
All right.
Any other ones? One last one, and then I got to go.
Yeah. Just find it. All right. Here it is.
How did dividends impact the decision to buy or not buy a call? How do or did dividends? Okay, so options. This is a good lesson. We go through it. Let's just see. Let me show you my thing here.
Show the class.
So options are priced off what's called the forward. And in the forward, you must understand it. You must understand it. Okay, step 2, drivers. So in step 2, we talk about the forward right here. Okay, the forward. And the forward is important because it takes into account interest rates and dividends. And options are priced off of the forward. And what does that mean? So if you have a stock that is trading at $100, and tomorrow there's a dividend. Okay, there'll be a dividend tonight for holders of stock tonight. Tomorrow, where should that stock trade? That stock should trade $99. Okay, so the stock's 100, dividend's $1 tonight. Tomorrow it'll trade 99. Okay, so you're thinking, okay, stock's gonna be down $1 tomorrow. I should just buy puts, right? It's easy money, right? I know stock's gonna be down $1. What if the dividend was $2? Let's just say it was $2. They were taken out tonight. Then you would say, oh my God, the stock's gonna be 98. I could buy the 100 puts and make money. No. The market already prices in where that stock is supposed to be tomorrow at 98. So the puts will have more value. So if it opens up tomorrow at 98 and you bought the puts, you probably lose money. You lose a day of decay on that put. Even though the stock is down 2, you bought those puts and you're thinking, how come I didn't make any money? You didn't make any money because everybody knew that the stock was going to be down 2. Okay, it should have been down 2. Okay, because the company took out. So forward pricing is something that you should understand. In step 2, we do it right early on to show you how to calculate the forward, what the forward is, how to calculate it, why it's important, And it also helps with understanding when you're looking at an option and saying, wow, it looks so cheap. There might be a reason it looks so cheap, because the market is pricing the calls lower and they're pricing the puts higher in anticipation of the stock moving down on a dividend. Okay. So the forward price, every asset has this forward price. It's kind of like the S&P future. Futures are exchange traded contracts, but futures and forward are the same thing. Okay.
Great.
Okay, so I without going into a whole teaching lesson on the forward, that's what the forward is. It is very important.
Great. All right. Thank you, Felix.
I gotta go.
All right. Great session. Thank you, guys. Make sure you like the video, subscribe if you haven't, and share the content. All right. We appreciate it.
Thank you, everyone. Thank you.
See you tomorrow.
Bye-bye.